So, yeah, today's topic of discussion is financial planning. So we have two experts who have been thinking about this and who have been doing this, who have been operating in businesses and practically doing planning and budgeting for their respective companies. So I'll let both of them introduce themselves to you. Before that, briefly, I'm a co-founder of Zenskar. I primarily look at product and tech here. I also help out with content a little bit. So yeah, I'll let you guys introduce yourselves and then we can go from there.
Awesome. So first, I'd like to thank Zenskar for having us on. Glad to be here with you all today. So my name is Evan. I am the VP of Finance at Powbox, which is a email security company for HIPAA compliance. I've been with Powbox for about 7 years and have worked many roles at the company, but currently heading our finance department. And yeah, really excited to talk to you all today about different strategies we have when we get into planning season, how we go about forecasting and budgeting. So yeah, really excited to jump into it with you all, and I'll turn it over to Ashish.
Yeah, thank you, Evan, and thank you, Zenskar and Saurabh, for having me on this webinar. It's great to be with all of you guys. We'll try our best to get most of you from this webinar on the financial budgeting and planning. My name is Ashish, and I'm a CPA with over 15 years of experience in finance, planning, accounting, auditing, compliance for multiple companies. I've worked with public accounting firms, startups, corporates. Right now, working with Six as a VP Finance. This Six is a SaaS business which provides IR, investor relations software to public companies. I'm managing everything from planning to execution, budgeting, and all the compliance related matters for the company. Excited to be here. I'm looking forward to get on with it.
Yeah, awesome. So I think you'd mentioned early on that both your companies, like the way they are structured, are a little bit different, and then those inform your perspective and objectives with how you plan and how you decide how to budget. So maybe if you can give a brief sense of the companies that you're working at, their size, and what their financial objectives are, that will help set some context for the audience.
Absolutely. So the company I work at, we're about 50 employees, and we're a SaaS business. We've had a couple funding rounds, our Series A, but that was about 3 years ago. And currently, our financial position is we're really pushing towards profitability, not really looking to take in any outside capital, and really, trying to control our own destiny. So when we go into financial planning season, it becomes imperative that, we accurately predict our revenue, we set budgets accordingly, and follow our plan to, each month continue that path towards profitability. So yeah, when it comes to planning season, it's really important, especially for us right now, because we're not trying to bring on extra capital. We're not trying to put ourselves in a position where, we're burning a bunch each month and need to take on more capital to run the business. So planning each year is a very important exercise for us.
Awesome.
Yeah, Six is an entirely bootstrap company which hasn't taken any outside capital. We have definitely take support from different financial institutes in terms of debts, but other than that, this is completely running on internal funds that we generate from the revenue. And it's a small size company. So far, we have about 20 people who have worked with us, and we are currently working with about 400 public companies who have used our software. And so recently, what happened is we have developed our own platform in the last 2 years. So we have been spending heavily on the R&D and product development, and the regular revenue operations or the marketing and advertising was looking at the back step. Now we are pushing towards commercializing the product that we have to build and looking forward to building the revenue based on the SaaS model that we have. So our planning, our budgeting is totally based on the amount of cash flows that we have and what we can generate from the revenue side. And also we are looking for third-party capital because we believe this is the right time to infuse more funds as we have our own product on the market and people are liking it. So yeah, that's how our planning is being all around these topics.
Oh, super interesting. I think, can you throw some light on how, how your goals are a little different from a company that's, like a traditional startup where, you raise some money and then you can tolerate burn for a certain amount of time until you reach profit. In your case, like since it's bootstrapped, you like the expenses always have to be less than the money that comes in.
Stage startups, there is always a problem of having enough cash to meet their end needs. We are always not struggling, but yeah, having a challenge time in fulfilling our inflows in the future. But for the financial planning, budgeting side, there is always a concern.
Got it. Could you maybe throw some light on like what your day-to-day looks like? Like what does a plan entail? So Evan, you had mentioned that your goals are, to reduce your burn over time and reach profit so that, you're not dependent on external capital for just survival. So can you talk a little bit about how you go about achieving that?
So, when building out the plan, we tried to, build out a model that we are very comfortable we can hit and is going to be as accurate as possible. We try to look for within a 5% variance. So one of the first places we start is with revenue. And when kind of modeling out revenue, I like to look at all of the different sales channels you have. So there might be a lot of different types of companies on the call. Some might be a more self-service motion. Some might be more a sales motion. And, at Palbox, we have both, a sales motion, a self-service motion. We have a freemium model product. We have a free trial model product. So I take into all of those into account and basically kind of just model out from like the top of the funnel to the bottom, how many leads we get per month for a specific product, how many of those actually convert to opportunities, what's our sales cycle, what's our average deal size. And by understanding those different variables, the sales cycle, your close rates, average deal size for all your different products, we're able to kind of create a model on revenue and waterfall all that down. And, after looking at your historicals, so looking at, 2023, 2022, how we built our 2024 model, you can kind of see like, are there signs of growth? Are you able to generate additional leads per month? And, you can safely, tap into those areas. So the first piece we definitely build out is the revenue. We want to know like, hey, what can we safely say is going to come in this year on the revenue side? And then based on that, we build out the budget for each department to make sure we can hit those numbers from a personnel, from a software spend, and everything else. So, how we do it, how I go about it is I start with revenue. I want to, as accurately as possible, be able to predict the cash coming in, the revenue coming in, and then I build the expenses around what we need to hit that. Ashish, how about you? How do you go about your forecasting process?
Yeah, so basically what we do is first we take the last year's budget versus actual. We used to compare what happened in the previous year. Did we miss our goals? Did we achieve them? Or how we perform in the last year? That really matters. And what we missed, we try to include those goals in the next years. Then, based on that goal, for the next following year, we take a base from the prior year's budget, we take the base, and then we make the adjustments for the coming year. What are the goals? Well, how the team is looking at, how we are looking to achieve those goals, what resources we need, what are the teams looking at, like customer success team, sales team, do they need? Do they need any additional software, or they need more team members to work on? Do they have different projects to work on this year to achieve their goals? So based on all those data we collect, we prepare a draft budget, for all the teams. We discuss with them. We also share our ideas to make amendments if they need anything extra. And then with the available resources, we allocate all those things to to different teams, and that's how our entire annual budgeting or forecasting process is done. And once the draft is ready, we present it to the whole team. The owner of the business is there, and yeah, once everyone approves it, yeah, it's sent to the implementation. Based on the numbers we have, we try to work on every month.
Got it. And like, how do you iterate on this? Like, for example, you might have a certain budget and a certain plan, but let's say on the revenue side, the sales team lead, they say that, oh, I want to change my strategy and maybe not focus on the inbound aspect as much and focus more on outbound. So this might need more salespeople. So how do you account for changes in strategy in your planning?
So for that example, if you want to spend, less of the marketing budget, let's say on inbound, on ads, and kind of focus more on the outbound effort, hopefully you have some data behind that, and you're able to see, for each outbound rep you bring on, based on how many calls they make per month, this is how many leads it's going to generate, your conversion rate for every lead, and your average deal size. So if you have the data, it can become a easier trade-off to make. If you don't have the data, it becomes very difficult, especially because outbound teams can be very expensive when you're hiring personnel. But if you have a good playbook in place for the outbound team, and exactly the ramp time and how much revenue they can generate per rep, it can be an easy trade-off. But really, it just comes down to, do you have the data? And then you can really understand, like, okay, we can scale down our ad budget, put it in the outbound, and this is the results we should expect.
Yeah, so my question is more related to, like, how much is finance involved with this decision making? Is this mostly, the teams that are making this decision, or is this more a collaborative effort between the specific team and finance?
Yeah, I think it's a collaborative effort. But if you talk about the percentage, yes, 75% would be decision on the sales team lead. But what we would do, we normally ask our team to create a project, whatever changes they want, whatever new ideas they want to implement. We request them to create a project, what they want to do, what are they going to achieve, how much cost it is involved, what resources they would need. So everything needs to be iterated on that project. And yeah, like Evan said, if they have a prior data, it is more easier to convince the entire project approval team to get this new project implemented and make the adjustment in the budget. So what we do on the finance side is we analyze based on what the project data is submitted to us. How much? I mean, most of it they're related to the cost versus benefit analysis. How much we're gonna win? What are our chances to win? And the risk associated, and all those kind of analysis that we do for each project. And then once the project is approved, we make the necessary changes in the budgets.
Got it. Great. And you mentioned iterating. So how often do you think there is like a good frequency at which budget should be iterated on, or is it more ad hoc?
Normally, we do it on a quarterly basis. We threw up the numbers for the future budgets. Every time we review our quarterly reports, we do our budget versus actual variances. We understand what it causes. Is it recurring kind of variance, which is going to happen in future quarters as well? So it makes sense to adjust the budgets, not to have variances for the same reasons every time. And also it gives a clear picture how much resources we would need in the future quarters. Because if we have burned more in a previous quarter for some reason, which is going to be happening in the future years, then we would need to make sure that we have enough resources to cover up those additional cost. So that's what we do. How about you, Ivan?
So we typically, during the annual planning cycle, we set the budget for the year, but we do run, our budget versus actuals on a monthly basis. Fortunately, we haven't had an issue where we're going over budget. So, typically every quarter we kind of see, how much under budget we are, and then we reallocate budget to where those dollars might be best spent. So we might see that we're under in one category, and we might see, what, these Google ads have been working really well. Let's reallocate some of that budget. Let's put it into Google ads. And we typically do that during our quarterly planning session that we have as a leadership team. So, we get together, we review, budgets for actuals, kind of see where we are in the year and see where those dollars will be best spent. So yeah, it's definitely, we look at the variance and we kind of see, we might be over in some categories. We're typically, at or under in most, but we really want to see, where can we reallocate and put that money to work the best.
Got it. And this is a question for, I think, more specific to you, Evan. Like, how far ahead do you forecast? Because when a company is burning money, then you have a timeline. Is it until the burn ends, or is it for the next year, 2 years, or is it assuming that you raise some money? Like, how do you think about the term of planning, and how long is actually useful?
Well, typically each year produce a 3-year forecast. I will say, we can predict 1 year pretty accurately. When you're looking 3 years in advance, so many things change. You might come out with new product lines. You might find out that, one sales channel isn't working anymore, so you have to abandon it and go to another one. So within a year, we can accurately get together as a team and agree on a plan to execute for that year. 3 years in advance, we'll still have the model kind of push out and make predictions at those levels. But, at the 1 year plan, that's what we present to the board. That's what we get approved every year. And, that's what we feel comfortable that we can achieve and rally together as a team and hit those numbers. But yeah, to answer your question, we do a 3-year forecast every year.
Got it. And is it the same for you, Ashish? Like for us, it's, we forecast for a couple of years, and then, like we at least forecast till, the runway that we have, and then maybe a little bit further. And, we keep iterating on it the moment like our strategy changes. If, we're planning an extra, even for every single extra hire, the forecast, like the budgeting changes based on reality.
Yeah. So what we do is we do a perfect budgeting would be annual for us based on the prior year experience. We do 1 year in advance, and we also have like numbers for the future years, but we don't really rely on those numbers, because since we have recently developed this product, we had changed our strategy entirely. We were using multiple products earlier before developing our own. So right now we are only focusing on how to build the market, how to build the revenue. So still we are following just annual process, 1 year on year, not going any further until we hit the cash burn zero or we hit the profitability from our own resources. That's our goal.
Got it. And do you use any special tooling for all this planning and forecasting activity, or is it primarily on Excel?
Yeah, it's primarily right now. It's primarily on Excel. We don't have any specific tool for the forecasting, but yeah, we have our own platform where we collect all the data, marketing or operational data, and then we have our accounting software where we record all the financial transactions. I guess most important thing is the reliability and reliability of the source of the data, and if it is complete and accurate. That's also most important than what I guess tool is a secondary part. The data is more important.
Yep, for sure. Thoughts, Evan?
Yeah, same as Ashish. We we typically do all our planning, budgeting in Excel, and we extract all our data from our CRM, from our subscription management platform, and then our general ledger to get all the expenses and really see all that. But yeah, pretty much all the heavy work, all the heavy lifting is done in Excel.
Got it. And I think you touched on this a little bit, Ashish, that you work with the different teams to get all their budgets, like to understand like how the next year is looking for each of those teams. So this for both of you, like how so on the expense side, how do you think about budgeting for different teams? Is it more you're dependent on the specific teams for data, and then you just like put it in your model and consolidate the information, or is it more of an active involvement with the teams to figure out if this budget is right and how to change it and what to do if it needs to be changed?
So for since we have a very small team at Six, we normally work closely for all our day-to-day work. Finance team is more closely working with the customer success for receivables or renewal invoices or sale. We are also working with the sales and on the new invoicing. So we are closely sharing most of the details. So on the budget side, we have like our previous budget sets for each team separately. We do discuss with them every quarter that are they looking to any major changes in their budgets. Like I said, if they need any further resources that they are currently using, is there any new project coming up? Like marketing team or sales marketing team is planning to attend an event outside Canada, then yeah, we do need to make a budget for that. So all those kind of communications do happen beforehand, and we do collaborative efforts on building our budgets, but it's not that we are totally dependent on those teams. We have our information in hand based on our prior experience, but yeah, we tend to confirm with them before we finalize anything.
Got it. And what about you? Is it more of is it more interactive? Like is it more collaborative thing, or is it that the team is making the decisions and your role is more on the consolidation and reporting and analytics side?
Yeah, it's interactive. So I'll schedule a meeting during planning season with each of the department heads and kind of review what our expectations are on a revenue side, what our goals are, what we need to hit, and make sure everybody feels comfortable with it. You got to get buy-in from everybody. You need everybody to be on the same page, everybody kind of rowing in the same direction. So once I do that, I typically start with sales and kind of go over, here's the revenue numbers we need to hit. Do you have everything you need to get there? Do you have the personnel? Do you have the tools? And I kind of already did some backwards math based on our current sales team and what the pipeline would look like for the year, what our close rates, and I kind of review those assumptions with them. And I say, is there anything we can improve here? And they may say, we can improve the close rates. So that's something we're working on, or it's a very collaborative process. So I try to get everybody to buy in on their department assumptions. So yeah, I typically start with sales, then go marketing, then I'll work with CS, our support team, engineering, and really make sure we have and they have everything that they need to hit the goals and hit the numbers. You can make it a little bit more, mathematical if you're scaling. And, if we get to that point, that's something I would do. For instance, like if you're, looking at your support team, like the average support person can handle so many tickets per month. Mm-hmm. And based on the amount of customers you have, that generates a certain amount of tickets. So you can say, okay, as we grow our customer base, our average ticket number is going to grow up. So then, anytime you need to hire a support rep. And then you can do the same for, customer success. How many managed accounts do you have? And every CS can handle so many managed accounts. We're not at that point yet. Right now, it's more, a collaborative process with each department head, since we're not, scaling at a crazy rate. But for me, it's buy-in and making sure everybody can agree to the same plan. And then we can set the budgets based on that.
Got it. Great. And I think this is the next question is more for like I guess it's for both of you, but Ashish, I'm like even more curious about your answer on this. Is like how do you manage cash? Because if you're bootstrapped, you're like like super dependent on the money that's coming in. So like maybe you can throw some light on how you think about it and how do you manage challenging situations when cash may be a little, there might be some uncertainty on whether you can hit the numbers or not.
Yeah, definitely. I think it's a pain point for every bootstrap company, and sometimes it's very hard to have enough funds. Sometimes you're not pretty sure that are we going to cover up the 4 to 5 months of our expenses when we have very low cash balance. We have to be very careful in on our spending, and but with the cash proper forecasting, we can definitely project how much cash we need, and we can get some advance kind of warning when there will be a situation of cash crunch. So what we do in on the cash side, like we have inflows and outflows. For specifically for inflows, what we do is, so we have like subscribers, and they have their payment patterns. We apply those payment patterns with their upcoming invoices, upcoming subscription renewals, and with those data, with that prior history from those same customers, we can easily build our inflows from the revenue side. We are not considering the new revenue. We are just considering the existing recurring revenue here, and then on the top we'll consider whatever we are expecting on the new sales. And on the expense side, like we have fixed and variable, all different kind of expenses. So fixed, we knew the salaries, the office rent, or whatever, your debt repayments, those are inevitable. You have to just pay it off, and you need to make provision. You don't need to make any additional provision for that. But for the variables, which may be or may not be dependent on a particular event or activity or project, you need to use maybe some of your assumptions or your historical data, how much you have spent in prior months, and is it going to be same? You may need to consider, if you're doing a long-term planning or budgeting, you may need to consider the inflation, the impact of economic conditions, and those things are definitely going to impact your cash. And sometimes in the tough situations where the cash balance is getting really low, we do a couple of strategies. We follow them. First, I would say is we talk to our customers. We try to, like, we have different billing cycles from our customers, like monthly, quarterly, annual. So we try to convince them to get onto the annual billing, where they will get some discounts or premiums, and if they pay upfront. So that's how we generate some cash. And on the expense side, we talk to vendors for some deferment of payments. We talk to our lenders for some debt restructuring. We also have some line of credit in place with our banks, and all those things. We also cut down our expenses on some of the unwanted software costs that we forgot about it and took months ago and never used it, or we might have some extra seats on those software, we never used it. So we try to look into those expenses which can be easily cut off. So those are the strategies we have followed, and I would also recommend, if somebody's going through such things, you can definitely look into these options. How about even have you been doing this same thing?
Yeah, there's one thing I want to point out that you said, Ashish, that I think is really important is, when you're trying to manage cash flow, revenue doesn't equal cash. So, the revenue coming in, that doesn't correlate to cash in your hands in that same period. So understanding that difference and how revenue does correlate to cash is really important. And every business is different. You might have free trials, you might have, all different ways of, billing and collecting your payments. So, kind of what we do is I look at, all the different ways that cash comes into our business, and I break that down. So we have new customers, we have expansion, and then we have renewals. And I break it down into those buckets. And then I, create our forecast based on our new business coming in. Then I kind of model out our expansion. So, how often are customers buying new seats? How often are we able to cross sell and get them on to other products that we offer? And then renewals, I download, all our subscription data, and I take a look at, because we offer a wide variety of contract terms, monthly, quarterly, annual, 2-year, 3-year, and everything in between. And what I do is I want to understand, based on our contract terms, what's our renewal rates, what's our gross dollar retention, how much can we expect to actually bring in from those renewals coming up on a periodic basis. And once I understand that revenue piece, then I want to understand, what's our revenue to collection. So from the time we invoice, what's our day sales outstanding? How quickly can we turn that invoice into cash in our hands? So, kind of breaking down those buckets, I then am able to create our cash forecast. And then on the expense side, just, really, really drilling into all of our different buckets, having a good list of our software vendors and when those renewals are coming up, when we expect to make payments for those. And we do a lot of conferences. So also having, a really good forecast of all of our conference spend that we're going to be doing throughout the year. So that's kind of how I go about the cash forecast is really breaking down all the inflows and outflows on the revenue side, how long it takes from the point we sign the contract to actually collecting that payment. And then on the expense side, really understanding, our software vendors, when we're going to pay them, all our different marketing initiatives, conferences, how much we expect to come out with that. And that's like weekly meetings with our head of marketing to make sure we're on the same page with all the expenditures coming up. But yeah, that's how we go about.
Awesome. I think we'll do one more. I have one last question. Maybe we'll take one more question from the audience and then we'll wrap it up. So I have one question. This is, I think it's more relevant to Evan. So when you have some leeway, so when you have some money in the bank, like when you raise some money from investors, how do you think about how to prioritize where to spend the money? Like how do you think about budgeting in, cases where you could go either way? You could spend on growth or you could spend on trying to reach profitability. Like
you have to really understand your go-to-market motions and where money is best spent. So, you might have many different go-to-market motions. For example, at Palbox, we have our inbound leads that come to our website. We have our outbound sales motions. We invest in trade shows. We invest in public relations. And really understanding, and even in ads, you can break it down like Google ads, maybe you spend on Facebook ads, and understanding like each one of those categories. How many leads do you generate per month? What's your cost per lead? On average, how big are those deals that you bring in? And by doing that backward math, you can begin to figure out where your dollars are best spent and where you can get the best return per lead, and ultimately per customer that you bring in. And obviously most channels have a diminishing returns. So, if you figured out a certain strategy for Google ads and you're like, oh, we're getting a 300% return per lead, you can't just triple your money because there's most likely a diminishing returns. And that's something that we understand and factor in. But when we determine where to spend the money, that's one of the exercises we do. Where can we get the best return on our investment? Where is the cheapest cost per lead, and where are we really going to see the biggest return on the money that we put in?
Got it. So like capital allocation based on like how the channels are doing and actively cutting when not required, I'm guessing, or not scaling a channel if it's not working out as well.
Yeah, and we've had that. We've invested in channels that didn't work, and you give it some time, you see it out, and you'll notice over time. You'll give it a year, and you'll see, okay, we've invested so much, it hasn't worked. Let's double down on what does work, and let's take the money that we were spending on that channel and let's put it in something else. It's important, especially for young companies, to experiment, especially because you don't have much data for a lot of these companies on what will work. So doing as many experiments and tracking them and really seeing that data is going to be imperative to find out what your best strategy is.
Got it. Great. And I think, Evan, you have a sales background from what I remember.
Yeah, so when I joined Powbox, we only had around 5 employees. And at that time, we were bootstrapping too. Most important thing was really bringing money in the door, bringing in new customers, and really scaling the business. So my background was in finance, went to school for finance, and my first job out of college was implementing financial planning and budgeting software for enterprise companies. But when I joined the software company, Powbox, I joined and was helping build out our partner channel and also doing some direct sales. So I do have, my first role at Powbox was in a sales background.
Interesting. So I think this question, I think we'll take one audience question before we sign off. I think, how do you plan for changes in the plan if the sales actuals are not in line with sales targets? Like, what
So
does
this is
it look like?
Yeah, it's important to get together on a regular cadence, at least monthly, with your leadership team and review your variance. So you should be tracking what your plan was, what your actuals are, and then you need to get together and review it and see, why did we miss? Why are our sales so much lower than we projected? Either we made a incorrect assumption in the planning process, or something else isn't working in our sales engine. So you really need to lift up the hood and see, why are we different? And there's many different ways you can go about it, but it really depends on what's the actual issue, and it may require scaling back spend if, let's say, it's an inefficient channel, or you made an assumption that this channel would grow or perform at a much faster pace than actual. But yeah, I mean, if you're selling less than you plan, it probably means you're also burning more than you anticipated. So it's really important that you just get together with your leadership team, review it, and quickly make a plan to either course correct, or you might have to scale back if it's not working out.
Great. Ashish, any thoughts on that?
Yeah. So if there is a downfall in the sales targets, we're not making that much of revenue that we expected. I believe sales team are definitely working it out. What's happening there? Where are we missing? Are we doing enough for generating the revenue? Like, we have as a team of sales, we have our marketing in place. We have online, offline. We are attending conferences everywhere in North America. So what are we really missing? Are we missing some actions? Are we missing some conversions? What is the rate that we converted before? Why is not repeating now? Is there any? I mean, those are the challenges that all the sales team are trying to figure out, and they prepare a report based on that. But on the budget side, we really need to look which channel is really working out. What kind of results are we getting from all the different channels? As we discussed before in our previous question, we definitely looked into the cost benefit analysis for all these channels, and makes some adjustments. Whatever is recommended by the sales team, if they want to try or they want to focus on one particular area, they will then, when we'll allocate our resources, that those kind of changes we do in our sales related budgets. But yeah, it totally depends on the sales team how they want to do it.
Got it. Awesome. We are out of time. We're a bit late because of the late start, but it was great. Thanks a lot for both your time, Ashish and Evan. And yeah, hope you had a good time. on this chat, and hope the audience got something out of it.
Yeah, it's great to be here, and nice to meet everyone. Nice to answer all your points. Hopefully, we are able to cover all the major issues on the financial planning and budgeting.
Yeah, awesome. Thanks a lot. I think one last plug from my side. So so I run a company called Zenskar. We build billing automation and revenue accounting automation software. So this helps you automatically invoice your customers, collect payments, and create all the revenue entries related to all the contracts that you sign with your customers, irrespective of the complexity of your contracts. So, related to what Evan mentioned earlier, we help you figure out when your revenue and your cash are different. We help do all the bookkeeping for you in all these cases. Awesome. Thanks a lot. And see you all later.
Yeah. All right. Thank you.
Thanks, everybody.
Thanks.